Yay, welcome everybody to Entrepreneurship Advantage. Today we're going to talk about helping riskier business access capital. We have a couple of Cameo members, EA members, who are going to talk a little bit about what a lot of you know. So what we'd like to find out is how your experience mirrors that or differs from that, and what else you're doing, and discuss, kind of have a nice discussion around that. And Melissa, you can go to the next slide. I think most of you know who I am. I'm Heidi Pickman, and I am the VP of Programs and Policy at Cameo. I do see a lot of familiar names. And Cameo, for those of you who don't know, we're a statewide network of entrepreneurial training programs and micro lenders in the state of California. And our members go from San Diego, which is where Susan Lamping is based, all the way up to Wairika, which this is a LA regional, so there's no one on here representing that, but we do have serve people all over the states, and our members do training and do small business loans and other small business services. If Melissa, you can pop a couple links into chat for me. We have a COVID resource page, which you can actually access from our homepage, but Melissa's going to pop that into chat. And we also have, on July 21st, are having an advocacy day, which a virtual one. It's our first, obviously it's our first time doing virtual. We usually do these in person. We usually do it in conjunction with a member meeting, but this year we're going virtual, and I want to encourage all of you to sign up for that and participate. We are going to be advocating for stuff that's good for small business, that's good for client, that's good for you, revolving around something small business lending and some other things that this legislative session is a really interesting one. It's moving really fast, and there's all sorts of new pieces that are coming on board like as we speak. So we're trying rapidly to respond to that and formulate an agenda. So it's a little bit, the agenda is a little bit in flux, but basically it'll be about an hour of hearing from some of your electeds and being able to ask them questions, or state leaders, and then meeting with your legislative sessions. Meeting with your legislators, and then we're going to reconvene together and do a little bit of a wrap up and do something fun together. So you can go to the next slide, Melissa. We're here today because we're, building the Entrepreneurship Advantage Collaborative, which the purpose of the EA program is to create economic opportunity for entrepreneurs and small businesses in LA County by connecting human, technical, and capital resources to the business owners through regional collaboration. And, we have these meetings to discuss best practices, strategies, and challenges that we have going forward, and seeing what the effects are in the small business sector. So if you could just get next slide, exactly. Everybody, so you're all muted. If you guys are probably Zoom pros by now, if you need to find the Zoom menu, take your cursor down to the bottom of the screen. You'll see the mic icon on the left, and you'll see a chat box. Feel free to type stuff into chat. We're recording. We'll send you a recording as soon as we can. And we're happy to send out the slides as well to everybody, so you don't have to take notes. Since we're a small, intimate group, if I'm going to take a few minutes, if you could, I'm going to call on you. If you could just take a minute to introduce yourself and give us your name, your organization, and kind of just a few words, maybe 5 words. If you do 6, it's okay. We're not going to count on what it is that you specialize in. And I will start with my friends and colleagues from Cameo with Melissa, who is our other co-host today.
Hi, can you hear me?
Yep.
Okay, great. I'm having trouble finding the Zoom buttons today for some reason. But I'm Melissa. I'm the SoCal Program Manager for Cameo. I help manage the Entrepreneurship Advantage Collaborative, and I've invited many of you here today because that's part of my role. Cameo is a convener, and we like to bring everybody together and share best practices, especially during this trying time. So.
And thank you, Melissa. How about Susan?
Hi, everybody. I'm Susan Brown. I'm Vice President of Training and Capacity Building at Cameo and work closely for almost a decade now with the CDFIs in our network on a whole bunch of programming that if it helps, we can talk about later.
Thank you, Susan. And now to the other Susan, who I bet, Susan, you thought I was calling you.
I was unmuting as Susan Brown. So
Yeah,
I was like, that's what she gave me.
You're muted. You're at the top of my list.
Yeah. Hey, everybody. Susan Lamping with CDC Small Business Finance. And I think most of you probably are familiar with us. We provide small business loans, community advantage, microloans, CDFI loans, and I'm really here to be a fly on the wall because I know Monica was originally invited, so I'm just kind of here to hear what's going on, especially in the Los Angeles area.
Awesome.
And nice to see so many familiar faces, Anna Marie and Larry and everybody. Really nice.
Great, thanks. And let's go to Alice. Alice Taylor.
Get unmuted here. Alice Taylor, I'm with the South Bay Entrepreneurial Center. I had the pleasure of speaking to you, I guess, on the panel in, was it February? Seems so long ago.
Right?
So
Yeah.
we're a virtual incubator accelerator, and we've moved very heavily into Zoom calls, and now are actually doing Zoom cohort sessions twice a month, and our monthly luncheon was yesterday with speakers. And so we're working hard to, reach out to everybody virtually. And so just looking at what ideas you guys might have, we've been looking more at upfront capital for startups.
Front capital for startups. Great. Maybe we can talk a little bit about that later. Selena, quick hello.
Hi, I'm Selena Davis. I'm with Pacific Coast Regional. We are a CDFI lender, Community Advantage lender, as well as having a Small Business Development Center, SBDC.
Thanks. And if we can keep it short like Selena, let's do that. Anna Marie.
Now the pressure's on. Hi, everyone. It's so nice to see you all. I'm currently with ICIC, Initiative for a Competitive Inner City, was previously with CDC Small Business Finance. I now manage a program in close collaboration with Kaiser Permanente and numerous economic development ecosystems. And we also have switched to an online format, and I'll actually put our link into the chat box. But glad to be here, and thank you for Cameo for creating the space for us for EA.
Oh, thanks. We're happy to. We love it. A very quick hello, because you're gonna have.
Hi everyone. I'm Babita. I'm the credit underwriter and loan servicing analyst at PACE. We are also a CDFI and SBA lender.
Brian.
Good morning, everyone. It's Brian Pfeiffer with Small Business Majority. I oversee our Venturize platform and have been immersed helping folks navigate the various federal programs, PPP, EIDL, et cetera, and working to collate all the various federal and state and local alternative relief funds that are out there.
Dan H.
Hi, everyone. My name is Daniel. I actually work with Eric Romero at the City of Long Beach Economic Development Department. I'm actually working with them to help increase access to capital for underserved entrepreneurs. And City of Long Beach also has its own loan programs as well. So happy to be here.
Oh, that's great to hear. Frank. Oh, I missed Emma, but I'll come back to you, Emma. Frank. Okay, maybe I'll go to Emma.
Hey everyone, good morning. Emma Kloppenberg, a program officer at Local Initiative Support Corporation, or LISC, a national nonprofit CDFI. Glad to be here, thank you.
Thanks, Emma. Frank, you there? Frank must be busy. Hassan.
Hey everyone, this is Hassan Del Campo with RISE CDC, formerly RISE Financial Pathways, based out of South Los Angeles.
Larry.
Hi, Larry Johnson with the El Camino College Small Business Development Center, and we provide business consulting and advisory services here in the South Bay, the West Side, and parts of South Los Angeles.
Awesome. Hi, Larry. Monica.
Hi, everyone. Monica Guevara. I'm here as a loan officer with CDC Small Business Finance. We offer loans starting at $20,000, going up to $250,000. And I cover Northern Los Angeles.
And you're here also because
I am co-chair of Entrepreneurship Advantage.
Yeah, and we neglected to mention that Anna Marie and Emma are the vice chairs. So thanks, everybody. Rocio. Okay, Rocio must be not able to speak. Sean.
Heidi?
Yep.
I'm unmuted now.
Who is that?
This is Frank.
Oh, hi, Frank. Okay, we'll go to you then.
Okay, hi. This is Frank Stokes. I'm with Bethel LA CDC, the best mobile accelerator for new entrepreneurs and emerging. And we provide training and technical assistance.
Great, thank you. If we have Rocio going 1, 2, 3, we can chime in the discussion. Sean, Snyder, 1, 2, 3, and then there we go. Sean, go ahead.
Oh, sorry about that. My name is Sean. I'm with the University of Lorraine Small Business Development Center program serving the East San Gabriel Valley. Great to be here.
Excellent. Nice to see you. It's a new face for me. Nice to meet you. Veronica.
Hi, everyone. This is Veronica Saldana with Self-Help. We're a credit union and also a CDFI. I oversee our California market lending, specifically here in Southern California.
That is really great to have you here. And are you, just one question, are you doing small business lending?
So we do in certain sectors, but the areas would be 100,000 to 300,000, and mostly in the food system sector or the faith-based sector.
Okay, great.
And we've been busy with PPP.
Sure, thanks. Yes, you have been. I think, I can't remember where we got our loan from, but I think it might have been you guys. So thanks, everybody. Just a quick rundown of the agenda. We have two of our colleagues who are going to talk about the state loan guarantee program and how they kind of fit into it and what they're doing. We have had a larger conversation with some of the lenders. I don't know if anybody was on the call except for Babita, but we're going to talk a little bit about why the state loan guarantee program is important, and we can talk a little bit about the policy pieces that are going on along with that. And then we're going to have Selena Davis from Pacific Coast Regional SBDC talk about, she's one of the 7 FDCs that administers the loan. So without further ado, I'm going to turn it over to Babita from PACE. Babita is the credit underwriter and loan serving analyst. And take it away, Babita.
Yeah, can I? Yeah, okay. Hi, everyone. As Heidi mentioned, we have enrolled ourselves with a Small Business Center iBank for the State Loan Guarantee Program. Traditionally, we were into lending the SBA loans, microloans, 7A community advantage loans. But considering the need of the hour, we want to help small businesses during this unprecedented times. So the disaster loan program basically entails small businesses in the LA County. And we would like to assist them with working capital assistance, right from 10,000 up to 150,000, and our sweet spot will be 100,000. Based on what capital right now we are having, we are trying to cover the entire LA County area, but there are specific service areas which we want to cater to, which I'll cover in the next slides. And talking about the state loan guarantee program, there are two categories. One is the disaster loan and the other is the traditional loan guarantee program. So for small businesses who have received the PPP or the IDIL loans can submit their applications, and we will consider them and submit it to the FTC, that's Selena from PCR, and we'll have them approved. The guarantee will be 80%. And for other disaster loans, small businesses up to 50,000, it's a fast track process, doesn't take much time. And if the client doesn't have a PPP or an IDIL loan, that's preferable because that's very streamlined, and we can have them approved and disbursed within a week's time. We are taking all the inquiries on our website, where we are asking just initial questions on the business, and we have our loan officers contact the small businesses on one-to-one basis and collect all the documentation. Selena actually is going to describe in detail in her slides. It's already covered what the state loan guarantee program is, but she only is right now covering the 80% state loan guarantee program, and under the disaster loan program, we have 95% of guarantee from iBank, which is really good as far as CDFI's capital disbursement is concerned. So yeah, I think Selena can take it from here. Yeah, I would like to talk about the service areas. So the first is the unincorporated areas of District 1. So all these areas, we want to serve the API clients because that's the requirement from our funder. And going to the next slide, we also will cover all small businesses in the city of Los Angeles and the South LA County, more specifically the cities and the areas which is described here below. But nevertheless, we have broadened our scope. This was something which was happening last month, but now we are also planning to cater all small businesses in the other areas, basically the entire LA County. So we're accepting applications, be it clients who have the PPP or who do not have, but yes, we are accepting all applications and we'll be underwriting and getting them disbursed. That's the new development.
Great, thank you, Babita. Let's just pop into chat if there are any other lenders on the call who are using the state loan guarantee program, either for the disaster loan or the regular program, just to get an idea if anybody else is doing those loans.
Heidi, this is Selena. I can speak as a lender as well who obtained guarantee. So we are a CDFI lender, and as I said, you know, we also do SBA guaranteed loans. But there are times when a business may not qualify for an SBA loan, and we would still like that credit enhancement. So sometimes on smaller transactions, or even if there's some refinance that needs to be done, but SBA's technical requirements make it ineligible, Also, the state guarantee program will do lines of credit. So the SBA does have some options for that. But on the smaller side, the guarantee percentage is lesser, I think 50%. And as you get larger, then the monitoring requirements are more costly, time consuming. So we've utilized the guarantee for lines of credit as well.
Great. So there is a question, Selena, if you're going to answer this in your thing, let's hold it for your presentation. The question is, what are the requirements to qualify for a loan? If you're going to cover that, let's just hold that. Is that something you might cover? Or no?
Yes and no.
Okay, let's get back to that question after Selena presents to see what other, like how much of that is answered. And just so everybody sees in chat, Liz is using the state loan guarantee program, mostly the 80% guarantee, and Susan Lamping is using, I'm guessing, Susan, you're using both. If, and Emma, if you could, are you not using, because we have some interesting information and I can tell you about the call after we talk about this, about the PPP users and things. Are you using the 80% because of PPP? People have got PPP or idle?
We use the 80% mostly because of the interest rate restrictions on the 95%.
Okay. Got it. Got it. Okay, so, all right. Well, thanks. Does anybody have any questions for Babita before I turn it over to Selena? Going once, going twice. Well then, Selena, we've kind of been slightly introduced to you, but I do want to formally say welcome. And Selena is the Senior Vice President, Chief Compliance Officer for Pacific Coast Regional SBDC. Take it away, Selena.
All right. So I'm going to improvise. You can move on to the next slide. I'm going to improvise a little bit because initially I was going to talk in general about the state guarantee program, and I'll still do that. However, yes, there is a separate disaster loan guarantee program which has slightly different requirements, and so I'll try to incorporate that into my discussion. Next slide, please. So PCR has been around for over 40 years. We've always had an entrepreneurial training institute, and that's where our long established history with Cameo came from, but then also being an FDC, a financial development corporation. That's why we were established to administer the state loan guarantee program. So it provides a guarantee similar to the SBA, but it is run by iBank. All right, next. All right, so right now the program's maximum guarantee is $1 million or up to 80% of the loan amount, whichever is less. And that's actually the same across both the standard guarantee and the disaster guarantee. The maximum guarantee term is 7 years. However, the loan could have a longer term, or it could have an amortization that is longer. The interest rate is determined by the lender. We have no restrictions on what interest that the lender can charge, with the exception of the disaster loan guarantee program. For that program, because it's a disaster, in order to get the 95% guarantee, you are restricted from charging prime plus 1. Okay, then it's a graduated schedule. If you do in between prime plus 1 and prime plus 2, you could get a 90% guarantee, and at 85% guarantee, your rate can be over prime plus 2. Okay, the amortization term is the same, or the guarantee term is the same. And likewise, you can have a term loan or a line of credit for both the regular and the disaster guarantee program. The use of funds can be working capital, equipment, business expansion, real estate. And the wonderful thing about the terms, especially on the disaster side, is we can really tailor some repayment schedules that fit the client's need. So, you know, we have some lenders that are looking at periods of 6 months or a year with interest only or deferred payments, and, you know, that gives a lot of flexibility to the borrowers. Next slide. So the fees associated with the program is 2.5% of the guaranteed portion. And then there's a $250 doc prep fee, and that is standard. Those fees can be financed in the loan. The program size standards essentially is up to 750 employees, including all of affiliates. And it stays that simple. Typically, we have a personal guarantee required from anyone owning 20% or more of the business. The credit history is deemed satisfactory, and the collateral is the best available collateral. Now, in terms of, you know, you want to say, what does that mean? Like when we go to the disaster guarantee, we realize that we're hitting clients in a time of real economic need. So there might be less reliance on the credit for a disaster program. Once again, the lender has established some guidelines, and typically they share their credit profile with us when we are reviewing their application for a guarantee. Okay, collateral is also best available. Same thing with a disaster guarantee. We know that, so we have a partner, lending partner, who established a disaster guarantee program early on before PPP rolled out, and while EIDL was still trying to figure out what it was doing. And it is a blanket lien on the business assets. So they're not looking at whether or not they have first or second and what that collateral value is. They're mainly trying to establish that this was an established, profitable business that could use the working capital to help survive or recover from the COVID disaster. So there can be some flexibility within the state guarantee program, but we really do work, as an FDC, I work closely with my lending partners to understand their credit profile and their credit policies. Okay, next. Right, so once again, on the lender side, we don't dictate the pricing. That's totally up to the lender. In terms of packaging, the lender corresponds with the client. As the FDC that approves the guarantee, we rarely have contact with that borrower. They use all their loan documents. There is a guarantee agreement that is executed between PCR and the lender, but it's essentially 3 pages or 3 different documents. The required reporting is quarterly, and that's just to let us know the balance on the loan and if the loan is current and performing. Typically, we promise a 2-week turnaround time, and that has to do with receiving a complete application package. What does that look like? The lender's credit memo, credit approval, and the supporting documentation. So when we receive that complete package, we then underwrite and approve the transaction. And that 2-week turnaround time is based upon established relationships where you know, we have all the information at hand, and things are clearly outlined in the credit memo. Therefore, we're not attempting to re-underwrite the loan. We're just trying to look at eligibility for the state program. Okay. And so with regards to the borrower, like I said, for the most part, they don't know, they don't have to interact with us formally. Even though we do have some borrowers that attempt to apply directly to PCR once they hear about the program, but they really have to be directed to a lender because it's the lender that applies for the guarantee. Sometimes it's more difficult and time consuming when you have a borrower and they don't have a home. So it's important that they find a lender that's willing to work with them. Okay. I think that's, oh, and then in terms of the default process. So the guarantee is a collection guarantee. Essentially, once the loan becomes 60 days delinquent, or if the borrower has filed bankruptcy, you're able to call on the guarantee. The lender must then liquidate any available collateral and then submit a package to PCR to call on the guarantee percentage. The guarantee typically will pay 90 days of unpaid interest. Okay, and the guarantee process is one where you submit a package, we have your file audited, and then we submit to the state for payment. And it can take 30 to 60 days, just depending upon how complicated the transaction.
Great, thanks, Selena. So does anybody have any questions for Selena on the program? Monica, did that answer your question about the eligibility?
Well, no, let me go back to that. So with regards to the main difference between the state guarantee and the disaster guarantee in our current market is the disaster guarantee, yes, has that low or higher guarantee percentage, interest rate cap, but also the borrower must not have received federal assistance, disaster assistance. So the state specifically, when they infused additional capital for the default program, specified that this was to be a catch for those folks that didn't qualify for the federal programs, PPP or EIDL. And there were a lot that, you know, there were, you say, well, who is that? As if you've listened, there are sole proprietors that didn't qualify. There are independent contractors that didn't qualify. There are people with credit issues that didn't qualify. There were people who were too small or not documented sufficiently to qualify. So there are folks out there that can fit within that category, and that's who the state is hoping to service.
Mm-hmm. Thanks. Just a little side note on that PPP requirement. So apparently the data shows that only $7 million have been used. Melissa, I think we could stop sharing our screen now. Let's go, yeah. $7 million of the state loan guarantee program have been used to date, and I guess it's since April. So that's almost 2 months, and so the money's not getting out as fast as people want. And I think a lot of people raise capital thinking they might be able to get it out with the 95%, you know, the 95% guarantee. You know, and they also, one of the reasons why is that, you know, they're trying to get, you know, cheap capital and get the money out the door. So to help small businesses for the loan guarantee program. And so we have been having conversations with various lenders. We had a conversation on Tuesday, as a matter of fact, and today's Thursday. Okay, just trying to get my day straight. With our lenders who are using the program, and one of the big discussions was they can't get them. Part of the reason why they can't get the money out of the door is because some people have gotten something from the federal government, and that they really want to get that money out there, but they're having difficulties doing so. So we have been having conversations. This is a state imposed requirement or part of the program. And the good news is we think that it's being worked into whatever, I think it's the budget bill. I believe it's the budget bill. There's the legislative, like I mentioned, the legislative process is a new mystery to unravel right now. And so there is good news about that we believe that that requirement will be lifted, and you will be able to use the disaster loan if people got the PPP or the EIDL. And the reasoning behind that is, you know, PPP or even EIDL, they might have gotten one of the advances, you know, and that's part of, you know, $1,200, $2,000 or something like that. And wow, that really doesn't help someone get through this crisis, right? But it makes them ineligible for the program. So while it might have made sense in the beginning, back in April when they did put that requirement in, because, you know, we were finding out that people weren't eligible for PPP or EIDL or weren't getting it, and they really wanted to help those people, it's not having the effect. So they have been, so kudos to the state for I think changing, you know, being willing to be flexible and get this right, so you guys can get the money out the door. So hopefully for those TA providers who are helping your lenders package loans, and for the lenders, you'll be able to get more of these dollars out and utilize the services of PCRs and the other people doing state loan guarantees out the door. So that's sort of the wrap up with that. Does anybody have any questions for Selena? Monica, did she answer your question more or less about the eligibility?
Oh yeah, I think my question was more to PACE to see if they could describe their qualification standards, like if they're different from, are they using different standards for this product as opposed to their other products?
To answer that, for the initial SBA loans, we were looking at 5 Cs, but here for disaster loan, we would only look at credit score. We accept up to 600. Decent cash flow. The business was doing well before the COVID situation, and of course now we look at the first quarter 2020 financials. It's okay. The character, the vintage of the business, how much promoters experience is there. Yeah, we do accept startup businesses also, but it should not be a very early entrant in the business. That there are cases where my clients have started the mass business just 2 months after COVID, and they are coming to us. So that is something we are not actually keen at funding, but those who are at least 1 year down the line in the business, we are still accepting those applications. And lastly is the collateral. As Selena mentioned, we'll be having a UCC on the business assets, and if there is any hard collateral, we will be taking that as well to just keep the client tied to the loan. So that's it.
Awesome, thanks.
Great, thanks. And Monica, I am going to turn it over to you now if there's no more questions on the state loan guarantee program, we want to hear from you all with what kind of things you're seeing, what kind of products you're seeing. So Monica, I am going to turn the gavel over to you and lead us in some kind of discussion.
Awesome. All right. Okay, thanks guys. Welcome to the discussion portion, the collaboration portion, if you will, of the collaborative. So we really want this to kind of basically be collaborative in every sense of the word. And that includes contributing, even if you're a first-time visitor here to Entrepreneurship Advantage and Cameo, or if you're, intimately involved in the planning and process of this. Essentially, what we envisioned when we first created this collaborative is that we would share resources and share tools that we are using that are effective with our clients, so that the entire LA ecosystem is that much more effective at helping small businesses. So welcome. So we have a couple of fun things planned for you, so get ready. With the magicalness of Melissa and Heidi as Zoom gurus, we're gonna do a couple polls. So, get a hold of your mouse, turn your attention to whatever screen your Zoom is on. We're gonna start off with the very first poll. So this, I believe, is,
Hi, this is Susan. Do we need to stop sharing before I launch the poll? Or does it work in the share mode? There we go. Okay. So now I'll launch the poll. Here we go.
Okay. Great. So this first question is, what other capital products are you offering to your clients? So we have a couple of options here. You can check as many as you are helping your clients with, utilizing, etc. But we just really wanted to kind of take a temperature gauge of what it is people are using and doing, working with clients on. So I'll just give you a couple of minutes to answer that, submit that. I actually just answered myself.
We're up to about 11 answers, 12. Let's maybe get a couple more answers in here and then I'll end the polling.
And while we're ending the polling, if Jeremy and Rocio, if you're there, you didn't get a chance to, oh, and Lindsay didn't get a chance to introduce themselves.
I think we have all the answers we're going to get right now, so I'll end the poll and share the results.
Awesome. Okay, so yeah, that makes sense. So clear and away, the winner is PPP. So 79% of people are using the PPP program, especially before it ends quite soon. About half of the people are using EIDL, half are using a state loan guarantee program, about 20% using City of LA, and 64% are using other. So this is where I kind of really wanted to dive into what other is. So if you marked other, I would love for you to either unmute yourself and share with us what other loan products and capital resources you're using, or share it in the chat box. So, and I can go first. Like I marked other as well. CDC is lending right now for recovery purposes. So definitely using that product. Yeah. So anyone else? Who else is using other? I know we have a couple other lenders. Lindsay, do you have any other items that you're using?
Yes. Sorry, this is Lindsay Chung, and I'm with Opportunity Fund. We have a few different products. We just started the state loan guarantee program. We have a little different qualifications than some of the other lenders mentioned, but we'll be sending out more information about that shortly. And we also rolled out a $5,000 grant program for small businesses. We're also currently still lending with our standard loan program up to $50,000. Thank you all for joining us today.
Awesome, nice. You know, it might be really helpful if, do you want to post the link in particular for like the grant program in the chat?
Yeah.
Okay, perfect. Let's see, who else do we have?
I can speak to my other, I answered other, this is Emma with Lisk. We have our typical loan products, you know, ranging from 50,000 up to 8 to 10 million, you know, standard loan products. We also deploy the Kiva loans. I saw Frank note that in the chat box as well. We do Kiva lending, and then we also have a really robust and ever-growing grant program as well, nationally and locally.
Mm-hmm. Yeah, I've definitely referred clients to that. That's a Verizon grant, right?
Yeah, well, so we're trying to steer away from using Verizon.
Oh, got it.
Only because, yes, it started out as Verizon as our funder, and then we've shifted to other funders in addition to Verizon. So, but most people call it the Verizon grant, but it is, funded by others as well. And also not locally, we have, other funders as well, but yes.
Oh, awesome. Okay, cool. Yeah, please do post that link also.
Emma, how many grants have you given out altogether to small businesses, and who are receiving them, basically?
I don't have the hundreds. I don't have the exact number. We are in round 5, I think now, of grants. Granting in the national program, and locally we did a series called Keeping Our Shops on the Block, where we partnered with TA providers and culturally specific community partners around tailoring grants to specific neighborhoods, like in Chinatown and Little Tokyo and in the Valley, etc. So we also deployed those rounds of grants as well. I think we did a total of 7, I want to say, rounds of granting through that as well.
Nice.
Cool. So real local kind of stuff going on, huh?
Yes.
I personally know someone who was a grantee, and she was able to use it for PPE materials to reopen her salon in LA.
Oh, that's awesome. Nice. I don't know if I do that. That's awesome. And of course, with all of our grants, we prioritize. I think you asked, who is getting these grants. I just spoke to some geographies, but also we always prioritize low to moderate income census tracts, and of course minority-owned, women-owned entities, and veteran-owned entities. Our grant system is done through a lottery, but certain lottery submissions are weighted higher based off of if you're in certain census tracts or if you have those demographic stipulations.
Awesome. Yeah, definitely please post that as well. And I also saw a chat from Hassan about some internal microlending and peer-based program. Hassan, do you want to unmute and just tell us a little bit about that?
So the internal microlending program we have has been one of our flagship programs that we have supported almost since the initiation of the organization. The program is loosely, or not loosely, but kind of structured off of the Grameen Bank model. So it provides graduated loans starting from $500 to $5,000, micro capital to what we call micro entrepreneurs and emerging businesses that just need a little bit of startup capital. And it's peer reviewed, it's completely peer based, and it works in a cohort model. So it's pretty non-traditional as far as a loan product, but we find that it's very effective and very popular. So during especially times like these where a lot of loans are, based on credit and things like that, these types of programs offer an alternative way for those who may have compromised credit lines or credit histories to get access to capital. So it's one of those programs that we like to put at the forefront.
Nice. Yeah, definitely also post a link there. Oh, and Heidi, do you have a question?
I want to ask Hassan a question, and who are your client? Like, at the same kind of questions, are we, and basically I want to make, are we reaching those who are in need, and it sounds like this program, yeah, anyway. So Hassan, I know where you guys, where you're working and who your clients are, and are they getting enough resources, I guess?
Yeah, it's a little difficult. It's a little challenging, just on both ends, since we're dealing with population that doesn't have a lot of access to other resources and is already kind of coming from a, I guess, challenging background. Even when we have these kind of lenient terms for them to access capital, it still can prevent a challenge for many reasons, which is why a crucial element and part of packaging these microloans is this kind of education piece that goes along with it. So we want to make sure that they'll be able to pay the loans back and grow a sustainable business. So it's important that that piece, that education piece, that technical assistance piece is paired with them obtaining the loan. So that can be a little bit of challenge. And also, you know, just life happens, and we understand that there's different kind of nuances when you're working with people that are just starting off their business. You know, they might be working at the same time, or other life challenges that are happening. So it's not as consistent as maybe you would expect a more established business owner. So you kind of have to set aside time and patience and accommodation for those types of kind of for those types of clients.
And what kind of loan size and terms is it, and who's providing the capital? Is it like is it peer-to-peer capital, or is it you guys got the capital and how does that work? Like, can you?
Great question. Like, personally, I would love to do some type of peer-to-peer capital thing, but that's not going to happen right now. Right now, the lending pool is, you know, fundraised internally by us. Sometimes we'll get some monies from some of our banking partners, and what will go into a rotating loan fund. So the capital is raised by the organization, but the loans, the individual loans, are kind of co-managed by the members of the cohorts themselves.
And what's the interest rate and how long do they have to pay it back?
Interest rates, I believe right now, well, I have to double check with the interest rates. We try to keep it very competitive and not predatory at all. The terms, it needs to be at least, for the first loan, it needs to be at least 12 months for it to start picking up on their, or 18 months rather, to pick up on their credit files. And then the loan term will, you know, extend a little larger or further out with the size of the loan. So I believe it might cap to like 3 years for the larger loans, like 5,000. We try to keep everything manageable and appropriate for the people that are participating in the program.
That sounds great. I would say definitely, and the reason I'm encouraging everyone to post links of wherever they're referring is also so that we can take note of these, because then when we, you know, send out the notes regarding this meeting, then we'll have a list of all of these great resources. So definitely please also post your website and, you know, how we can find out more about your program. I also saw a couple, I think Sean, I don't know if he's still on the call, but oh yeah, there you go. Posted a link about some really great resources involving grants, either locally or through the city. So I just wanted to query Sean if there's any individual program that has been particularly helpful to your clients, or anything you would kind of shout out of the list that you provided.
No, I just say echo what was said before. Is a lot of them are mainly, you know, if you didn't qualify for EIDL or get any other CARES assistance type stuff. So they're very very specific in a lot of ways, everything from industry to geography, you know, and there's a lot of stipulations, so you got to really read the fine print on each one. But Sophia on our team, I can't take credit for this. She has done an excellent job of curating a lot of these resources, and I just wanted to share with the group. So. Yeah,
super helpful. Okay. And then I noticed a couple other people, Frank, you mentioned Kiva and Jewish Free Loan Association. So any insights or stories you wanted to share about either one of those?
Oh yes, we had a candidate for a Kiva loan, and his campaign was funded in 24 hours, which was absolutely
That's amazing.
Yeah. And we also have referrals to Jewish Free Loan, and that's still in the process, but we have a candidate there as well.
Awesome. Good deal. Heidi, yeah.
I have one other resource. I can't believe I almost forgot. It's not really a capital resource, but it's kind of more of an income resource. But and you all, it'd be great if you can help us spread the word, and we'll include the link when Melissa does her follow-up email to our toolkit. But we have engaged a legal aid. It's called Legal Aid at Work up here in San Francisco. That is helping walk people. It's helping walk people through the unemployment assistance programs in applying for state unemployment. So there's something called pandemic unemployment assistance, PUA, and self-employed people are eligible. We'd love for you guys to get the word out. Send it a link in your email. There's a toolkit, there's a blurb, post on your social media. We'll also post on LinkedIn, so share that. It's for anyone who's self-employed, it could be a really good way for them to get some money into their coffers, especially, you know, this is landscape, or, you know, those people who are self-employed who aren't working and whose income went down. So Selena, we just posted a link about that, and there's some, so you can go to get people to go to our legal services.
Awesome.
Yeah. And if anybody, yeah, we'd really, if you do send it out, we'd really love you to touch base with Melissa.
Oh, that's great. And then Frank, you also mentioned, Cathay Bank has a Smart Relief loan program. That's awesome. And I just want to do a quick time check. Do we have until 12 or past 12?
Until 12.
Ah, okay. Sorry, guys. Stepping on toes of next meeting. We had a couple other polls planned, but you guys have a bunch of awesome resources, so this has been great. I just want to go back to the presentation just really briefly because, I mean, Entrepreneurship Advantage is made possible because of a couple different funders that have been really awesome and contributing funds from basically from the get-go. So I want to thank in particular Cameo that has been awesome in terms of being a platform for us, even when we were just a group of people meeting for coffee and hoping for better for the LA ecosystem. CIT1 West, Bank of the West, First Republic Bank, all of our steering committee members that are on the call and even those that aren't, and our entire Entrepreneurship Advantage network. So I hope everyone found this beneficial and informative, and we're able to share and receive resources. That is the, really the objective behind these calls. Please do sign up for our next meeting. We're going to have one monthly during these COVID times because now it's more important than ever to share and stay on top of all these things because they are so niche and ever-changing. So definitely connect with us on LinkedIn. We have a LinkedIn group where we post a lot of these different resources, and I'm sure we'll be posting a lot of these today because these are great resources. Sign up to be a part of our newsletter, and you'll get pinged every time we're having one of these meetings. And whenever we can, hopefully we can all meet in person and have some group meetings, even if we're socially distanced while we're meeting. So I thank everyone for coming. Please do share the resources, share the wealth. Thank you, everyone, for helping coordinate. And guys are awesome. Keep up the good work.
Thanks, Monica.
Thank you.
Thank you.
Good day.